Morning, it's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Today is Friday, 21st February 2025. Please note, I'm not a SEBI registered advisor. All my thoughts are original. You probably won't get this kind of thinking in other shows. So anyway, if I mention some stocks, these are not recommendations. Please do your own due diligence. So today's topic is actually stock markets myth versus reality. In fact, this cannot be completed in just one session. I've been doing this for a long time, and today is as good a day as I think one should do. I will do this myth versus reality series over an extended period of time. But for today, let us try to explore a couple of myths. Before that, let's go to what's happening on the market. So again, the market repeated what it was doing last 10 days. That is, it opens lower and then it meanders around, and then the second hour onwards, it starts going up, but it doesn't generally cross the opening high. Now, so what happens is that there are certain people, or let's say organization, which probably want to buy at lower levels. So they create the scare in the morning, and then it breaks all supports, and people start selling, and then they start accumulating. This I've observed when I was on the floor trader in Madras Stock Exchange in the early 90s, that the big operators used to do this. And I think something like that is happening, especially in the broader market, small cap, mid cap, and micro cap. We are seeing this phenomena of the corporates coming back and buying back their own shares from the market. Generally, whenever this happens, of course, this is not really become big, but whenever this happens, you can expect that a significant bottom is made. So we don't know whether this is a final bottom, but a significant bottom. So what happened yesterday was the market off the lows, but ended largely lower. Though yesterday was a settlement for Nifty, nothing, no fireworks, and Bank Nifty really fell off primarily because of HDFC Bank and ICICI Bank, which spoiled the party. On the other hand, on Wednesday, they were very, very strong. So this kind of confusion, which is there in the minds, make people look at other data points, and then they come up with these myths, which I will try to address. So Nifty held about 22,900. It is not falling below 22,800. I still hoping actually, even though I'm a bull, for the market to fall below 22,800 and remove the last of the bulls who want to think that 22,800 is the support. There is nothing significant about 22,800. It's just another number. 22,500 also is just another number. But the conditions there will be more conducive for a long-term investor. When I say long-term, even 6 months, it is very conducive if it breaks 22,800. But market has got its own mood. So small cap went up, micro cap and mid cap, all of them went up close to about 2%. Auto is where the problem is, and I think yesterday the government has announced that for EVs there will be duty, or this one excise will only come down to, or the taxes will come down to 15% from 100 and odd percent. So that I think one has to get concerned, especially of these autos which are concentrating on EVs like Mahindra and Mahindra. And I think going forward, not only is it good for Tesla, you will have Chinese guys coming in, the BYDs, and even Xiaomi, for instance. Which Xiaomi is a phone company, but they have now gone into I mean EVs, and they are supposed to be very, very good. So we need to keep a watch on autos and auto ancillaries, whether how they will match up to the new policy of the government, which is slated to come from April 1st. So Nifty Bank fell, and PSU stocks extended gains because PSU stocks were the worst affected, because most of the punters were sitting in PSU stocks. So slowly it looks like there is a cleanup in the PSU stocks, and I think they are poised for a further rise from here. FIIs and DIIs, nothing much to be said. Both of them match rupee for rupee. FIIs continue to sell. So the opening, I think, selling happens because the FIIs, the closing buying happens because of the DIIs. That is what the pattern seems to be. So what happened overnight in the US? You had the Standard and Poor, Nasdaq, and Dow Jones all opening lower. Dow Jones was down by 650 points at one point of time. Finally, it closed above. It closed minus 450, primarily led by Walmart, which fell 6.5% because of the disappointing forecast. And we're not taking tariffs into consideration. We're talking of only what they feel based on current considerations. We don't know what Trump's tariffs will do for Walmart's financials. US 10-year yield dropped by 3 basis points to 4.50. Dollar index, you see, it was people are talking about 110, 114. Now we're sitting at 106.35. Brent oil is still strong because of some other problems in the in the Gulf. So Gift Nifty again, as expected, will open lower about 48 points, and we have to negotiate one more day. I suspect. I doubt today we'll have any great selling. You will probably have buying coming in at lower levels because there is some sense of confidence in the broader market. That is very, very important. So this is what I was saying. The draft guidelines have come where they're going to promote electric cars. This is primarily to electric cars at this point of time. So two-wheelers like Bajaj Auto, TVS Motors, Hero Motors may be spared in terms of the stock prices. And they are talking of concessional import duty of 15%, which is dramatically different from where we are today at around 100 and odd percent. So let me just whether I can show you something on the what our myths and all which we are talking about. So okay, let's see here. Let's take this. Okay, yeah. Now you just look at this. This is the Indian government bond 10-year yield. You see, people are thinking that the 10-year yields have gone up, so therefore, inflation is going to go up, and therefore, foreigners are scooting from the market. This is a 10-year yield chart on a monthly chart. Just look at this one chart is generally on a downward trend. Just like US yields, for instance, US yields, which are actually going up, Indian yields are actually coming down, which is very good for Indian economy. If you go back and from 2014, somewhere it peaked out at around 9%. From there, now it has come down to 6.7%. So, as far as the macroeconomic indicators are concerned, for the for the Indian 10-year yield, it is on a downward trend. But if you look here, unless they always create as if India is a high interest, the 10-year yield is going up, so one has to be careful and all that kind of thing. So this is one myth which I am breaking here. Then you take the US 10-year yield. Now US 10-year yield again, they say people feel it will shoot up, but you see last time when it went up was about 5.02, was in October 2023. It has not crossed that. So I don't know where the fear is coming from that US yields are going up and therefore we have to worry. And there is another myth which is here, which says whenever US yields go up, money will go up from our country to from India to US. In fact, Mr. Kotak also makes this statement. Kotak is we both are alumnus of Jamnalal Bajaj, but I beg to differ here. If you say 4.5 is big, okay, then look at what happened, what used to happen when the foreigners actually came in. They came in 94. That time it was 6.75. The yield was 6.75, went up to 8. And our big bull run started between 2003 and 8 when the yields started moving up from here. From about 3%, it moved up to 5%. Whereas we had the biggest bull market in equities. So what are we talking about when we say foreigners are running away to US? Just because, a big man says that, then we have to counter that with facts. So the myth is that if yields rise in US, Indian markets will fall, foreigners will run away to US. That is not true. From 3 to 5% means nearly 66% the yield went up during between 2003 to 2007, whereas Indian market went up fourfold between 2003 to 2007. Then another rally which took place in 17 to 18, again the yields went up from somewhat 1.5 to 3. It doubled, whereas our market went up the entire 2017. So that is another myth which has been broken. Then look at this USD INR. When it went up to 87, 88, people said 90, 95, 100. And today, if you look at it, we are actually lower than what we were in the last 1 month. Okay, we are much lower than the first time it went to this level, 86.60, was in 14 January. So now we have come back to 14 January levels, which is something, and I think it is worthwhile to look at that. And then you have oil. Oil, people said it'll take off and it'll go here, there, everywhere. Look at it. When in 2022, oil was 140. The Indian bull market of 2022 to 24 started around that time when oil was 120, 140. We are now sitting at oil of 76.37, and we are talking of as if, the bull run is in, equities are gone. See, Indian market may come down because of other reasons, primarily because of valuations. It's got nothing to do with macro indicators like oil, DXY, US 10-year yield, USD, INR. So these are some of the myths which I want to, just destroy them. Do you people, however big they are, however experienced they claim, the numbers speak for themselves. So you have to be very careful when you hear some big people talking some, what shall I say, some numbers. You have to go and cross check. I always cross check the numbers, and I realize that most of the time the so-called big analysts, I'm sorry to say, because when I cross check, I see that the numbers are at variance with what the big analysts say. So once again, to reiterate, we are okay as far as the 10-year yield is concerned. Indian 10-year yield, US 10-year yield. The foreigners are not running away to US because there is 10-year yield is there 4.5%, and we are sitting here at 6.7. The difference is not much. Rupee is now strengthening actually. The dollar index is coming down. So I don't see any reason for us to put those reasons are for the market to come down. And the way the market has been, what shall I say, has been structured, makes me feel that we should not really get too concerned about, what's happening here on a day-to-day, basis. Just look at it 3 months down the line. And as I keep repeating, Independence Day 2025, I think the numbers will be quite surprising for both bulls and bears. So as usual, I continue to be bullish. I'll buy on decline. But whatever you do today, I hope it is successful. Thank you for joining me.